Hello, everybody. Mike Sorrentino here, along with Bepin, and I hope everybody's having a very happy October so far. Or we'll see if October actually happens.
October,
But
yeah.
we don't
But
have enough days yet. Yeah, we're
I was
moving in a
hoping we'd forget
direction.
about that one. We don't need to talk
Yeah.
about October anymore.
Well, we'll see. We've
Yeah.
got we've got enough trading to kind of to say that we got a pretty good chance here. But anyway, this week we're going to talk more about in the headlines. Some of the news that's been coming out lately. I find it interesting, Pepin, that sometimes the media is successful at scaring people, and other times, no matter how hard they try, it's just going nowhere. And I think
Yep.
that'll be a general theme through some of our content today. Great quote from David Ogilvy. For those of you who don't know who David Ogilvy is, he founded one of the most successful, if not arguably the most successful, marketing firms decades ago called Ogilvy and Mather, which I believe now they just go by Ogilvy. Great quote from him. On the average, 5 times as many people read the headlines as they read the body copy. How many times? Who's been guilty? Let's be honest
Hand
here.
up
Who's
over
been
here. They can't
guilty?
see us, but my hand's up.
Yeah. And I'll take it a step further. Who's been guilty of seeing a headline on like X or Twitter or Facebook or whatever and be like, ah, and then you forward it along to a million people that you know, and you never read the content.
The
I
worst is
will
when they
admit
come back.
I've done it.
Yeah, and the worst is when they come back and say, "Did you read the first comment?" That
Yeah.
tells you that this is whether it's fraudulent or whether it's a
It's AI
parody account or
generated.
something. Yeah,
Yeah.
exactly.
Something like
No
that.
worse feeling than that, being like, "Oh, my bad, guys."
Yeah. Yeah. A little egg on your face.
No.
Well, hopefully we won't do that today, Bepin. So let's go ahead and get into.
Yeah, kind of the biggest headline right now
Yeah,
in
the
terms of
the
financial
whole
news.
idea of a government shutdown.
Mhm.
I wish I could tell you that this is something that's new, and we've discussed this in the past. Over the years now, it's come up a few times because we've had to deal with it. It's a lot of talk, it's a lot of news, a lot of headlines, but when you dig into the data, it just doesn't necessarily move the needle all that much. Let's look at total payrolls by sector.
Mhm.
If you look on the far right hand side, the payrolls, the quote unquote jobs, the numerical impact of this government shutdown from an economics perspective, from a broad aggregate economics perspective, just isn't that big of a deal. If you look at the top two colors there, the I don't even know what color, so purple, I guess, and then that
Purple,
like
darker purple.
yeah, the darker purple and that kind of bluish teal of sorts. That represents federal payrolls for all intents and purposes, and then state and local. So the purple one is really kind of the one that's being impacted here. I'd say the most.
Hmm.
There might be some spillover into the teal, but that's there's a bit of a gray area. But even if you counted all the teal in there for some reason, excuse me, you're still running into a situation where, in an aggregate level, yes, it's unfortunate that some people are not getting
Hmm.
paychecks. My guess is that once this whole thing's done, like every other time before, it's all going to show up in their mailbox as back pay. But
Yep.
for right now, we're just not seeing any aggregate impact of the economy just yet. Now, if it keeps going, then we might start seeing issues at airports and whatnot, where we might start seeing a little bit more of an impact. But even then, given how the U.S. economy is predominantly consumer spending and then some business spending in there, I just don't see it. And when I say predominantly, I'm talking about high 80%.
Yep.
I just don't see this government shutdown really impacting our GDP on a go forward basis.
It's not just the GDP.
It is not that whole thing called the stock market, and not just the U.S. stock market, financial markets.
Yeah.
So the S&P 500, the bond market, international. We could go on and on. Treasuries. If you notice here on the far right hand side, all those colorful lines and all those colorful boxes, you notice how they're, for all intents and purposes, above zero.
Hmm.
And I think that's indicative of not just consumers reading the headlines and not really caring to a certain degree. I think the markets are not caring either. And I would say that I don't know, Bepin, correct me if I'm wrong, but I don't know if I've seen a single trading session or extension of sessions that closely tied to any kind of bad or scary news about the shutdown?
No, I think we've learned over time that these things just don't matter. They don't impact stock earnings, like you said. This is mostly government expenditure that it's going to affect, and it's only going to affect it temporarily. Um, Really, it's a talking point for financial and political news. Something to keep eyeballs on the screen.
And it's not just, I wouldn't say it's just this year either. It's not this shutdown. I mean, if you go back in history, I know this is a busy chart here, a table here, but just notice some commonality, some things that stand out to me. First, on the right-hand side, we have a lot of blue and a lot of red. And I don't think there's any real consistency here, other than the
Mm.
fact that we've seen shutdowns with Republicans, with Democrats, with predominantly blue Senates. I'm sorry, blue Congresses, red Congresses, and split Congresses. They just happen. But when they happen, as you can see here on that column just to the left of those colorful columns, you'll notice that the S&P 500 12 months after the end of the government shutdown, going back, what, 50 years at this point, almost 50 years, has been pretty positive. And not just positive, like nicely positive, to the
Yeah.
tune of over 12% average return annually.
Yeah, exactly. The markets just keeps chugging along. And again, this is, I think, another reason why you haven't seen much movement this time around is just because history is a great roadmap to what happens during shutdowns. There's a lot of political headlines. There's a lot of sword rattling. But at the end of the day, you usually come down to a deal, and the federal employees get back pay, and we move up. We keep moving forward as an economy and as a market.
And it's not just consumers going shopping and spending money, Beth, and it's our own government. To a very kind of strange purchase to a certain degree, right? I mean, I know we talked about this at this point months ago when the White House decided to take a 10% stake in Intel,
Ugh.
the company Intel.
Yeah.
Uh, that was just the beginning. All right. Now we've seen a lot of announcements since then, uh, uh, predominantly around mineral rights, rare earth. If you've heard this term,
Yep.
rare earth minerals, the
Yep.
type of things that go into stuff that's very, very important to our economy. And I would say that it is in the history of the United States for most of the times, at least I remember and I've read about, has been because of a bailout, right? The government comes in and they bail out Freddie and Fannie Mac. There's some type of a saving white knight sort of situation to a degree. Today is a
Yep.
little different. These are now some might argue that's a little bit of what's going on in Intel, but for most of the deals that have been announced, it's been not to save them, but to frankly profit from them.
Profit.
I
Yep. And,
would
and bolster those industries too.
and bolster those industries. And look, Bepin, when I was in business school, look, I went to University of Chicago where free market economics is basically invented. And Milton Friedman and his crew over there would have said, "What in the heck is going on? Why is any government getting involved in private enterprises?" That's a
Mhm.
recipe for disaster, and there's a million reasons why that's a big deal.
Yeah. And
But, you know, it's not always the case. I mean, I would say that there tends to be a gray area here, and I don't know, Bepin, I think you'd agree with me that
no, I
there
think
are some
that's
times where it does make sense to kind of break the rule, maybe not break them, but bend the rules.
no for sure. And that rule, isn't all encompassing, where you look at certain industries that are critical to the US independency and self-sufficiency. And I think we've talked about them numerous times. The three being chips, pills, and minerals. Um, Without having your own source of those, you open yourself up to a ton of risk. Whether it be via something like COVID, where shipping lanes in the world all kind of shutters for a little bit, or whether it be something little scarier, which is the possibility of a geopolitical event where you never know that the war starts or wars start arising, countries stop doing trade with one another, and it's too late at that point. You can't you can't flip a switch and turn these productions on. You need to have things in place. Um, so just kind of today we're going to be looking to highlight some of the reasons why it just makes so much sense to for the U.S. government to bolster these industries. So first of all, let's take a look at chips here. So what you're looking at your screen here is chip production exports. So countries that supply the world with chips. If you look over there to the left with Hong Kong, China, and Taiwan, those are all, I mean, Taiwan obviously is a little bit different, but for all intents and purposes, it's China. These are controlled by China for the most part. And if you look on your screen, quick hand math will get you to almost half the production comes from China. Um, the rest coming from other Asian countries and the US over there with $44 billion worth of chip value exports. And those are the higher end ones, of course. But um, the issue here is you're very reliant on China. And obviously, as we've seen recently, there's been a lot of rising tensions between the two nations, not just with us, China and Taiwan. Obviously, they've been circling, doing a lot of military drills. I don't know the exact number, but I'm pretty sure they have like a reunification plan that in 2040 or something like that, um, Taiwan will have to be China, or there'll have to be some sort of conflict to resolve that. But point being here is we don't produce enough chips. We don't have anywhere near enough to satisfy the demand just for the U.S. And this is something that the U.S. government's looking to address right now. And that's where you saw that Intel deal. This is the reason why you're seeing all those mineral rights deal. This is the U.S. critical mineral imports and the reliance on foreign sources. For some of these minerals that you see over here to the left, we're 100% reliant on foreign sources. There is no production in the U.S. that can feed the U.S. demand. This is what we're looking to correct. So a lot of those deals you saw there earlier with those mineral companies are securing the mineral rights here for the U.S. to produce its own minerals, and we're helping those companies be able to do that. Now, I know that you see that investment, the percentages of the companies we bought, but there's also going to be other support via government approval, speeding up production. I believe for one of those mines that we saw, the one in Alaska, they're going to actually build roads. They're going to have government build roads to make sure that you can access those mines and make it mineable. It's very difficult for the US to do it on its own, because the thought would be like, why don't these companies just do it on their own? And the reason being is because they're competing with countries that or companies that operate in countries that heavily subsidize them. Not just subsidize them, many of them don't regulate them. So China alone, probably one of the largest competitors in this space. China has almost 40% of their mining industry is unregulated. How on earth can you compete as a US miner with China? When those companies don't have to worry about environmental, they don't have to worry about worker safety, they don't have to worry about like workers' comp. There is just so many expenses they get to write off or not even spend because they operate in a country that doesn't focus too much on regulation. So it'd be very, very hard for the US to compete on its own, or for these companies to compete on their own without some sort of government assistance. And like Mike said here, it's not just us. Milton Friedman would be rolling in his grave if he saw these type of charts here. But if you look at the chart below, it is government expenditures on subsidies as a share of GDP. And almost across the board, even with our developed partners here with France, Sweden, and Germany, they spend much more of their annual GDP to subsidize critical industries. Oh, you're good.
Bepin, I think you said something really interesting here. You said the developed partners,
Yep.
developed. These are
Mhm.
not banana republics. These are not third world nations that are playing corrupt games with their industries and trying to stale. These are like tier one trading partners, developed countries that
Mhm.
have subsidies at multiples at our level.
No, like we were talking about earlier, it's not that all industry needs subsidies by any means. No, obviously we love free markets, and that's what's produced a lot of the success that we've seen in the U.S. But there are some that do require it because they're competing against other competitors in countries that do heavily subsidize them. It's like fighting with one hand tied behind your back. You're gonna have a really hard time winning those fights. And now the U.S. is finally starting to step up the support. Primarily, the next chart here is looking at the industrial spending, same as a percent of GDP. As you'll see, majority of our trade partners across the world here, now you add Taiwan and South Korea and China, the little gray line you see above China, that's literally just um, a China-specific subsidy that they offer that no other country has. So you don't see a gray bar anywhere else because they're the king subsidizers. Another way to look at it here is when we were talking about Intel earlier and how they needed this type of investment, how, rightfully so. The companies they're competing against are Taiwan Semi, heavily subsidized by the country, Samsung, heavily subsidized by South Korea, ASML, heavily subsidized by Netherlands. It's very, very difficult for them to compete in chip manufacturing without some sort of government backstop. And what have we seen as a result of the government announcing these deals? For the most part, you've seen all the stocks, though, all those companies I mentioned earlier, all public stocks. You've seen all those stocks skyrocket. And the reason being is because now they finally have the support they need to really expand. As soon as the government inked that deal with Intel, I think Intel for the next like month went on a headline binge. They announced deals with Nvidia. They announced deals with AMD. They announced deals, I believe, with Broadcom, all about producing chips. And the reason none of those companies would have done it before is because of the reasons Mike was mentioning earlier, how they were a little bit different. They were struggling. They were losing a ton of money on their foundry business because they had to sell at competitive prices with the Taiwanese. And the only way to do that is to match their price. And the only way that they could have anywhere near matching their price is to really just take a loss on making those chips. And this is where you need government support because in the for-profit business or like when we're looking at a stock and you saw those numbers where it's like, well, they're losing money. Why would you continue to keep investing in that? And the reason we need them to keep investing in that is because we need our own domestic manufacturing of chips, or else we're going to be reliant on the rest of the world for the rest of times. And look what we're seeing now with not just the chip side of it, but the minerals. What was that? What was that letter that went out? I think it kind of caused a little bit of a market scare a week ago. China was sending letters to the rest of the
Mm.
world, basically telling them that we're going to restrict our rare earth minerals to the rest of you because they understand that that's a huge like lever they have to pull to put pressure on these other countries to kind of soften their stance on China because they know that if they stop sending it to you, you have no option. You have nowhere else to go, and this is where we're trying to get in front of. You know, we're trying to remove that reliance on China by providing these companies investments and government support. And not to really harp on China here, just to keep hammering them, but these guys are the king subsidizers, and this is just kind of to bring it to scale as like what our companies have to compete against. The chart you're looking at your screen is showing Chinese direct subsidies for listed firms by subsector, and this is the share of their profits. So if you look at their software and services sector, almost 35% of the profits that are made in that industry,
Staggering.
it's
Absolutely
insane. Yeah,
staggering.
35% of the profits made in that industry are directly tied to subsidies, government handouts, essentially. How can you compete with them on price? It's almost impossible. When you have 15 to 35% of your profits just via government subsidies, it allows you to sell at a much, much cheaper price than the market. And this how China's got majority of its market share. They've played the game quite cleverly. Um, they've used their excess savings to subsidize and make their goods so much cheaper that the rest of the world can't compete. And over time, a lot of the world just stopped even wanting to compete because they're like, why not just take the handout? But I think the last few years, and particularly the beginning of this year, has really opened the world's eyes to the risks of that, the risks of over reliance. And again, I know we've talked about this a few times saying that like it's not every industry that needs, and we're fully on board with like majority of industry needs to stay free market because that's how you get the best innovation. But there are some industries that just don't make any sense to leave out on their own or to let die because they'll die if we don't support them. Like a mineral, half of these mineral mines we invested in wouldn't occur if it wasn't for the government stepping in. And if we don't have those minerals, there aren't a whole heck of a lot of other places to go get it from. You have to get it from China. And if you have to get it from China, they know that that is a huge lever they can pull in any future negotiations with them. So these are headlines that we see all the time, you know, where you see these, and I've seen different ones. So a lot of them, for the most part, are somewhat bullish. They agree that like the U.S. government announces these deals, but then you see a ton of headlines where they they're a little bit misinformed or they're a little scary, saying that we're becoming, like you were saying earlier, a banana republic, which is further from the case, you know, where you saw that chart a few slides ago. They're looking at other countries that would not, no one would consider a banana republic have been doing this for decades, and They're not doing it stupidly. It's finally time for the U.S. to get the playing field leveled, and that's what all these deals have been in hopes to achieve. And we believe that they'll continue to happen. I think there's more deals scheduled along the way, and very bullish for the U.S. economy long term. And with that, we would like to thank you for tuning in. If you have any questions or any concerns, feel free to reach out at any time. Have a great rest of your day. Enjoy your weekend. Bye.